to the Trading Market Technicals Morning Call video for Wednesday, December 19th. Nice follow through from the previous day. We did get some positive ongoing talks with the fiscal cliff resolution. That gave us a little bit of a bigger push to the upside, made us a little giddy, and markets actually had panic buying. And this is where we did push up and broke above that 1430 area that I was telling that was going to be a little bit of resistance, and sure enough, we did break through. Now, we are in holiday trading mode, which means that the markets are going to be thinner as the days progress, getting closer to that Christmas and New Year holiday. That means that the moves will be extreme. You have to be a little bit more nimble. When you're wrong, you need to get out and need to reevaluate, because markets can go. And if you give you a perfect example, look at the euro dollar. Has been literally just on fire, testing 2012 highs just in the last 2 days, and that's because the markets, a lot of these interbank dealers are taking off. You have second and third tier traders that are just managing the desk, really not doing much of anything, just watching what happens here. So markets do get a little thin, people get a little overzealous, if you will, and they're looking to chase performance, and that's what's happening here. You have the markets actually rallying. Now with this fiscal cliff resolution, once it's confirmed, we're going to see if the market does sell on the news. Now that's a very good point. You need to really watch and be aware of what's happening here. So real quick, NASDAQ up 43, big day up, big help from Apple. We did get that follow through that we mentioned yesterday morning. Dow up 115, S&P up 16, and obviously the dollar was down on the day. And I'll show you a picture of the dollar. And the dollar is helping fuel this rally, like I mentioned to you in the last couple of weeks. Now, let's just go real quick and look at our indicators. Really, nothing has changed. Just want to show you that we do have some further room to the upside. We are coming into some heavy resistance, guys. Now, we could probably test the highs, if not go further, if everything stays status quo, because there's nothing really going to change. A lot of these big hedge funds and money managers, any tax selling is starting to unwind. So whatever's going to have, you're going to have repositioning of portfolios, and nobody's going to look to actually start hurting the way the market is trading right now. So it's something I just want you to realize. When you're day trading, obviously a little different. A lot of position and swing traders here that listen to the morning call. So I would just tighten the stops up. And just be aware that we're coming into some heavy resistance, and I'll go into the charts now. And as you see here, let's just real quick, we'll go into housing starts, building permits, crude inventories. Keep an eye on crude. Crude has been actually pushed up higher yesterday. We have initial claims on the 20th. And personal spending on Friday, Michigan sentiment as well. So nothing really too exciting, but we do have existing home sales. We do have some housing data, which definitely will move the markets. All right, so let's take a look at some of the indicators. We have our bullish percent S&P trickling higher, moving higher here. As you can see, it almost went on a sell back here on the 10th, and then actually now we're moving up to these lofty levels. Now, 72, 75% right up in this area here, I would have a little concern. Do have some room to run. As you can see, the S&P down here, we're testing that 1446 area. So keep an eye on it. We're not exactly overboard, but we're getting into that overboard territory. NASDAQ weekly, and I mentioned that several weeks ago. Look, we went into a buy signal, and now we're getting into this overboard area here. Again, still room to run, and even if it's overboard is not a sell signal, but just keep that in mind. We're getting into these lofty levels up in this area. We'll do another NASI weekly on Monday. Okay, so let's take a look at our NYMO as well. Same thing here. Really hasn't moved. Maybe a couple of points here. 19 points, 32%. Still enough room to really, before we get really into overboard territory. So, and what this is really just telling us that we are above into resistance. We are getting a little long in the tooth, but that does not mean that we are that we can't go higher. And here again, S&P above the 50. This is starting to concern me just a little bit. As you can see here, this is the SPX. We're coming into resistance. This is coming into resistance as well. And every time we got into resistance, we rolled, as you can see here. And we rolled here and back in here, and we had a real big dip back in August. So again, we are into overboard territory, but that does not mean that we can't move higher. And here's our NASDAQ record high percent index. Now we're getting back into this overboard territory. So let's see if this thing rolls back down, maybe catches this here, and that would be another signal maybe that after this we do push down, we get a big final push back up. It does mean that we can't get another sell, another one or two big down days. But without once the fiscal cliff does get announced that we have come to a resolution and they like the deal, let's see if they sell the market. That's something that's definitely possible. Take a look at our SPX ATR. Starting to cook up a little bit, as you can see, we're at these low levels here as the markets go higher, and now we're coming into support. So just something to keep an eye on. Right now, there's nothing telling me that that we're going to be on a sell. Now, usually when we have a large engulfing candle, I'll show you in the charts, we do have a little bit of a consolidation pause before we move higher. So that could very well be today. Now the dollar. Dollar broke that long-term trend line. If we see our ratio chart, U.S. dollar SPX, as you can see, there is no strength to the SPX at all. Coming into oversold. So this is something that I'm going to be watching. If we dip again, maybe back down to the 79 area. And if you look at the weekly chart, remember I have this head and shoulders pattern. We have not triggered yet a sell signal. So this head and shoulders pattern is still valid, but it's not signaled a bearish trigger. So we'll just keep an eye on this as well. All right, so let's go right into our daily chart. Now, I mentioned a couple weeks back that I said we have some head and shoulders patterns forming, and a nice big break higher, back up into this slanted neckline. We did break high. We had a nice follow-through day from yesterday. But here is what, and again, it's obviously when the markets are higher and there's low volume, maybe not as strength, doesn't have as strength as the previous rallies, doesn't mean obviously you can't make money. It's just be cautious. The people the traders that are swinging and or just having, position trading 1 to 3 days, markets can roll over real quickly when you don't have that big support. And here's what the CCI index, and if you can see here, we had a nice big move up here and here. We came right back in. We held that above that 100 area, and here we held it briefly, and now this big push here, we didn't even break above 100. So this is just telling me a little weak. Momentum's a little weaker than the last big push up. Okay, that doesn't mean that you have to sell anything. Just a word of caution. Okay, here's our 10-minute. Just want to show you the activity. We had a little bit of a gap, a back test, and then we rallied back up, and then we consolidated, pretty much tested the highs into the close. A lot of short covering, I can tell you that much. A lot of short covering yesterday. So we'll just see what happens, see if we get a little more follow-through. And this is why I like the spiders. I like the spiders because it shows me volume. Definitely confirm yesterday's move. This is what I like. Very big, a big move, nice volume. Previously from the last 5 days, good move higher. Now we are into this overbought area again. As you can see here, we're back up above it, so we'll have this longer term uptrend line to contend with once we get up in this area. But again, good move, head and shoulders, inverse head and shoulders pattern, break the neckline. Little sloppier here on the spiders, but nonetheless doesn't have to be textbook. We're back up above it now, so we're testing this high and confirmation on volume in the spiders. And here's our larger head and shoulders pattern, inverse head and shoulders, on a 60-minute, measuring 15-13. Can we get up there? Absolutely. Can we get up there in a couple weeks? I don't know about a couple weeks, but anything is definitely possible in this crazy market. But nonetheless, we do have a larger head and shoulders, inverse head and shoulders pattern. 15-13 will test. So let's see where we go. Maybe another consolidation and some sort of like a 5-way or ABC or a 1, 2, 3, 4, 5 pattern, choppy fashion, testing that 15-13 in this larger inverted head and shoulders on a 60-minute chart. Now, the 30-minute charts on the spiders, we did hit our target, as you can see here, 1538 on the close. So officially this target has been met, the smaller inverted head and shoulders pattern. Take a look at our 30-minute Bollinger Band. I mentioned just 2 days ago, I said, guys, watch out, Bollinger Bands are pinching again. Doesn't tell you the move, but it just tells you that energy is building. And this is a great little chart. I really highly recommend it. Put in your trader's toolbox. S&P 30-minute, you could do it with the spiders. Bollinger Band standard, a Bollinger Band deviation, and you take a look at it. Now, again, it could have been to the downside, but once that one big candle breaks out, more than likely you'll have that follow-through for the day. And sure enough, we did get that Bollinger Band's pinching. So now we're really wide. We're going to need to consolidate. Bollinger Band's going to pinch again, and then we'll look at it from here. But great little chart. I always like to show this to everybody. Okay, IWMs, beautiful risk on. No question about it. Look at the volume. 3 days up. Real nice. We had 3 days down, 3 days up. So inverted head and shoulders, and now we're back up above it, and we're probably going to be looking to test the highs. And as you can see here in our volume profiles, real light, back all the way up until that 86 area. But again, you're going to have resistance. We're coming to resistance now, right up in this area here. This will be an area of resistance that market's going to need to contend with in the next couple of weeks. Same thing, XLF. Actually, I think physically made 2012 highs yesterday. Big volume, 2 days, overbought, but again, not a sell signal to be overbought. So looking really constructive here on the bull side. Now, again, I think there's really nothing negative out there to really contend with unless they sell the news on this fiscal cliff resolution. So that's something really that I just want to keep an eye on. Transports, again, follow through. We mentioned that we're consolidating at the upper end of the trend line. Big move up yesterday. And again, this is seasonal time that the markets are heavily into the transportation sector, obviously with all the deliveries that are going on with the holiday season. And the diamonds, same thing with the diamonds. Big move up. Volume confirming. And now we're just broke above this outside day. Let's see what happens for the next couple of days. And Apple. Now, I mentioned yesterday that Apple may have put a tradable bottom, and I noticed that I had a bunch of emails that a lot of people took Apple to the long side. Congratulations, hats off to you. Now, I would say that we should get a little bit of follow-through. That 20-day moving average, as you can see here, how it's kind of just slanted sideways. 558, 560 would be probably an area to take profits, even 550 area. But let's see, we got a little bit of follow-through here. One thing I don't like is the volume. If you notice, we had lesser volume than the previous day, which I do not like. But again, we're oversold here, and we could get a little bit of pop because of the holiday season. We could get at least another 2-3 day follow-through. So just tighten your stops to your risk perspective and your trading plan. But great call, good. A lot of people did buy the Apple on this on that break and that little bit of that back test. So nice big move up. Let's just see where it goes from here. I do see a little further upside, but once this subsides, then we're going to have to reevaluate. But right now, if you're long, I'd stay long and just keep your stops tight, protect your profits. And lastly, the Qs. Nice big move on the Qs, obviously because of Apple. Big volume here. So looking constructive, guys. Overall, quick recap. We are looking constructive to the outside. We are going to, our next resistance area is going to be about that 1460-ish area, 1470, and then we'll have to reevaluate. But a nice big 2-day move. Let's see if the market digests, probably pauses, and then what happens from here. It's going to be interesting to see once they really physically announce this fiscal cliff issue has been resolved, does the market rally again, or do they take profits and sell the news? And that's what we're going to keep waiting on. Okay, guys, have a great day, and we'll talk to you tomorrow. Take care.